Hey everyone, welcome back to Corporate Decoder. Today we're diving into a Form 10K, and let me tell you, it's a wild ride. Think of it as corporate truth or dare, but instead of a silly stunt, we get juicy details about a company's past year, like a blockchain-fueled soap opera with money and risk on the line. We're decoding Exodus Movement Inc.'s report, a company that wants to help you ditch traditional finance using cryptocurrency. The report is essentially a yearly business checkup, so let's see if Exodus is thriving or just surviving. Expect to hear about how they make money, the dangers they face, and where they are headed. Exodus launched back in 2016 with the idea of creating a super user-friendly wallet where people can manage their digital assets safely. Think of it as a digital vault for your crypto, aiming to be easy to use while still letting you keep control. Their goal is to help people leave behind the old banking system using their Exodus platform, which is like a gateway to everything blockchain. They boast a platform where you can send, receive, and store tons of digital assets. Now, this is where it gets interesting. The company was founded by John Paul Richardson, the CEO, and Daniel Castagnoli, who runs one of their subsidiaries. These two guys together have a huge amount of control over the company, essentially being able to make almost all the decisions. We're talking about a controlled company, which, as we'll get into, has some interesting implications for regular stockholders. A big part of the crypto world is all about different types of digital assets. This includes assets like Bitcoin and Ethereum to privacy coins and stablecoins. Cryptocurrencies that focus on keeping transactions super private, so that only the sender and receiver know the details, and stablecoins that try to keep their value steady by tying it to something like the US dollar. These can fluctuate significantly in value over time. So how does Exodus actually make money? A lot of it comes from something called exchange aggregation. The platform uses something called an exchange aggregator to help users swap digital assets for over 21,000 digital assets. It connects users to different exchanges, aiming to give them the best prices and quick order fulfillment. The user requesting the trade receives a message specifying the amounts and fees charged by the API provider, who Exodus has no further involvement in. And Exodus receives subscription fees from the API providers. Think of it as being like a travel site that finds the best flight for you, but for crypto. Exodus makes it possible for its users to buy crypto using regular money, this called fiat on-ramps. That way, you can use your credit or debit card to buy Bitcoin or other digital currencies. And if you want to turn your crypto back into cash, there are off-ramps for that too. You can exchange digital assets for fiat currency to be deposited into a bank account. Another area is staking, where users can earn rewards by participating in the blockchain validation process with third-party provider Everstake. It's like earning interest on your crypto. By helping maintain the blockchain, users can stake their digital assets. Exodus makes it easy for users to diversify their product offerings. For example, new apps provide the opportunity for Exodus to generate more revenue. Also, integrating third-party apps also allows Exodus to attract additional users, so they expose users to digital asset apps within their Exodus wallet. Now let's talk numbers. Based on the price from last year, the market value of their Class A common stock held by non-affiliates was around $38.2 million. Keep in mind that shares held by executives and big stockholders were excluded from that calculation. Here's a peek at what Exodus holds in its own digital treasure chest as of the end of 2024. Bitcoin is the biggest holding at $181.2 million, then some USDC at $11.80 Ether at $8.8 million, and then other digital assets at $6.2 million. It's basically a modern-day corporate gold reserve, but instead of gold bars, it's crypto tokens. That translates to total treasury is $264.7 million. The percentage breaks down to 26% of liquid assets like cash and treasury bills, and 74% in digital assets like Bitcoin and Ethereum. And it's quite a change from the year prior when they had a 40-60 split. Exodus runs as a remote-first company, meaning everyone works remotely, with about 210 full-time equivalents spread across dozens of countries. All of them, including the non-US based contractors, are paid in Bitcoin. Of course, there are risks, big ones. The report is upfront about the wild volatility and negative publicity in the digital asset markets. The collapse of FTX and other big players has made things shaky, and Exodus isn't immune to those tremors. Then there are the regulatory hurdles. Laws around blockchain and digital assets are still being written, and what's legal today might not be tomorrow. They use geo-blocking technology to block their platform in places with heavy sanctions like Crimea, Cuba, Iran, and North Korea. This section is important. Some of the top people and groups that are heavily invested and own big chunks of this company are people like John Paul Richardson and Daniel Castignoli, who together control the company. Also, there's Clifton Bay Investments LLC, the largest Class A shareholder, which had previously filed for bankruptcy. And finally, there were no documents that were incorporated by reference. Alright, let's zoom out and take a broader look. On one hand, the increase in monthly active users is a really good sign, indicating more and more people are finding value in Exodus and its platform. Their focus on partnerships and diversifying their products could help them tap into new markets and user bases. This all points to a company that's trying to grow and adapt in a very fast-moving industry. But like any crypto company, there's some real risk here as highlighted in the report. Their revenue is tied closely to a handful of digital assets. If those assets go down in value, Exodus could take a hit. That reliance on a few key assets makes their income less reliable. Then there are the financial reporting issues. The fact that they identified a material weakness in their financial reporting and haven't fully fixed it is a red flag. This might make investors nervous, and it makes it harder to really trust the numbers in the report. However, they have expanded substantially over the past 2 years by adding more infrastructure and tools. The company is moving in the right direction. The company has a dual-class structure. This essentially means that some people have a lot more voting power than other people. As a Class A stockholder, your voice isn't as loud as the main investors. Exodus faces a few major risks related to regulation. Any actual or perceived failure to meet applicable requirements may result in an adverse effect on our business. A great example of this is how the company's relationship with the FCA resulted in them being put on their warning list. This could have had a negative effect on financial performance if there wasn't an agreement. It is also important to recognize that this is a very new emerging business model that could very easily and unexpectedly face government crackdowns in the future due to laws, or lack thereof, that may be introduced. In conclusion, Exodus is in an innovative industry, and there's big growth potential as long as they continue to grow their user base and partnerships. But it's not without its downsides, especially those risks in the crypto world and how they could impact financial results. Thanks for watching, and don't forget to hit that like button and subscribe for more breakdowns of corporate reports. What company should I decode next? Let me know in the comments.